Donald Trump's new tariff proposal isn't about marginal gains or tit-for-tat disputes. It's the opening move in a bold, multi-pronged economic reset, one that aims to reshape not just American industry, but the balance of global power.
New round of President Trump's tariffs set to take effect in just days as businesses and consumers grapple with the latest tariffs that snapped into place this weekend.
President Trump's trade war, the president now calling it an economic revolution, with more tariffs due to take effect this week.
He wants to cut the reliance on foreign goods, to bring jobs back to America, and to make it great again.
Trump's Wednesday announcement of sweeping 10% tariffs on most imports and much higher duties on dozens of other countries.
From clothes to electronics to alcohol. This week, individual targeted tariffs scheduled to hit more than 50 countries. Goods from China facing a new 34% tariff, Vietnam 46%, and the European Union slapped with a 20% tariff. All in addition to 10% across-the-board tariffs snapping into place yesterday on hundreds of countries and nearly all goods entering the U.S.
This isn't politics as usual. It's brinkmanship, with the global economy as collateral. So what's the plan, and why now? Let's break it down. Trump and Secretary Scott Bessent have a plan, which is 3% GDP growth, 3% budget deficit, and 3 million barrels of new oil production per day. Hinges on revitalizing the domestic industry. Tariffs are the jumpstart, make imports expensive, and suddenly, US manufacturers find room to compete. It's a brute force strategy to rebuild America's industrial base, but there's a catch. Factories don't scale overnight. In the short term, consumers pay the price. Literally, goods get more expensive. The administration knows this. That's why they're front-loading the pain now, betting that by 2026, the benefits will begin to emerge. To soften the blow, tax cuts are being floated. And if that's not enough, a currency devaluation could follow, making imports cheaper without touching tariff rates. It's risky, but in politics, timing is everything. There's another layer. Tariffs aren't just tools, they're funding sources and negotiating chips. Projected revenues from the new tariffs could exceed $700 billion in year one. That won't erase the deficit, but it buys time and flexibility. Pair that with spending cuts, and suddenly the Treasury isn't operating on fumes. More importantly, tariffs are leverage, especially when deployed strategically. This isn't just about economics, it's about power. Long before tariffs were announced, Trump's team hinted at a fundamental reordering of global alliances, skepticism toward NATO, a cooler stance toward the EU, and quiet overtures to Russia and Saudi Arabia all signal the same thing. America is pulling back from multilateralism. Now, tariffs give Washington a blunt instrument to force compliance. Expect a wave of bilateral deals, countries that offer strategic concessions on trade, security, or industrial alignment get relief. Those that resist, they pay the price until they come to the table. This is the America First doctrine applied to global economics. Let's not kid ourselves. China is the primary target. For years, critics have claimed China is not a developing country. It's an industrial powerhouse manipulating its currency and flooding markets with subsidized exports. Tariffs could push Beijing toward currency appreciation or force broader economic reforms. At minimum, they slow the export machine that has challenged US dominance, but the ripple effects don't stop at China. Europe may face demands to decouple from China or offer more support to Ukraine. India could be pushed to cut tariffs and strengthen its US ties. Mexico and Canada might see pressure to crack down on fentanyl trafficking. This is transactional diplomacy in its rawest form. The US market is being weaponized. Access is no longer a right, it's a privilege. One that comes with strings attached. Back home, the effects will be uneven. Industries like steel, autos, and textiles, Trump's political base, stand to gain. But sectors reliant on global supply chains, like tech, retail, and construction, could take a hit. And the battleground isn't abstract, it's electoral. If jobs come back quickly and inflation stays tame, the tariffs could look visionary by the 2026 midterms. But if prices rise and job growth stalls, it's a political liability. Voters don't care about policy mechanics. They care about paychecks and prices. Trump knows this. Reagan had Morning in America. FDR had his fireside chats. Now, Trump needs his own narrative engine, something to sell this vision before the clock runs out. Zoom out, and the strategy comes into focus. Lower yields to manage debt. Cut deficits to restore fiscal credibility. Impose tariffs to ignite growth. Redraw geopolitical lines to reassert control. It's not chaos. It's calculated disruption, with immense upside and matching risk. If the plan works, debt becomes manageable. Domestic manufacturing surges. US leverage is restored. Trumpism is vindicated by 2026. If it fails, inflation spirals. Retaliation kicks in. Midterms are lost. US global strategy drifts aimlessly. This isn't a tweak. It's a gamble on every front, with just 18 months to show results. At its core, this is about rewriting the rules. Trump doesn't just want better trade terms. He wants to end the post-war consensus that built the global economy. He distrusts the WTO. He sees multilateral institutions as constraints. His team envisions a world where every country negotiates with the US directly on America's terms. Call it neo-mercantilism. Call it transactional hegemony, but don't call it incremental. Access to the American consumer becomes the crown jewel, available only to allies who align with Washington's strategic goals. Economists are sounding the alarm. They warn of higher prices, retaliatory tariffs, disrupted supply chains, and lost goodwill. They cite history's failed protectionist experiments and argue the costs will outweigh the benefits. They're not wrong, but here's the kicker. They're also not winning the argument. Trump's team doesn't accept their premise. They see free trade not as a rising tide, but as a trap, one that enriched elites, empowered adversaries, and hollowed out middle America. They don't want reforms. They want a reset. Welcome to a new era, where economics is no longer technocratic, but confrontational. Trump's tariffs aren't an outlier. They're the opening salvo in a new form of economic nationalism. Success is measured not in GDP points, but in strategic autonomy, manufacturing capacity, and political leverage. And here's the irony. The global trade order, once built by the United States, is now being torn down by the United States. Because one thing is certain, the age of passive globalization is over. Welcome to the age of transactional power.